Hello guys and welcome back to the channel. In this video I'll be talking about the trades that I took last week and how I spotted them. Before I begin, sorry for the last video. I've just realized the voice was not that good. I'll try and work on that. So we'll jump in straight to the trades that I took this week. This week I took four trades. Uh, the first trade, US dollar against the Canadian dollar, was a trade from last week which I logged 2% profits, and I left the trade running and it managed to go to reach to my profit target of 4.1%. That's why I've added the 2.81% for 81% for this week. And the next trade, the first trade that I took this week was on New Zealand dollar against Swiss franc, which I was stopped out on my stop loss with. On that trade, I lost 1%, and the next trade was New Zealand dollar against the Japanese yen, which I was stopped out at break even. The third trade was gold against the US dollar. It's still running, but I've already moved my stop loss to break even. So if the market goes back to my entry, I'll be stopped out at break even. And the last trade which I took on Friday was uh, on Australian dollar against the Canadian dollar, which is still running. I've not yet moved my stop loss to break even. If the market opens on Monday and it hits my stop loss, I'll be stopped out at 1%. So this week I only managed to close with 1.81% profits, and I have one trade on Australian dollar against the Canadian dollar, which is still running, and I've not broken even yet. So I'll start with this one. I had already talked about how I spotted this trade last week. So as you can see, the market was coming down and it had formed this bigger continuation structure. If we go down, you can see that the market had impulse, and if we go down to the 1 hour time frame, the market was forming a expanding triangle, and it got to the third touch of the expanding triangle impassively, so I couldn't enter with a risk entry. And up after going up, breaking the trend line, it started forming a correction, which is a reversal signal, and I entered on the break of that reversal structure with 35 pips stop loss on Friday. The market closed around this area, and I had locked in 2% profits. I had locked in my trade at around this area, and as you can see, the market almost the whole of that week it was just correcting, and on Thursday it impulsed down. This week it hit my profit target, which was below the structure right here. This was my profit target, and that's how I managed to spot that trade, and that's how I closed that trade. So to my next trade, this is the first trade that I took this week, was on New Zealand dollar against the Swiss franc. We go up to the higher time frame. We can see that this was a bigger correction according to me, and it had impulse down. According to me, this was another bigger correction, and I had a double top area here which I had marked. The market reached to that double top area the first time and it impulsed down. As it was approaching the double top area, on this one I broke my rules a little. I was waiting for the market to reach to this area and impulse down and then form a correction. I had planned to enter on the break of this correction, but that was not the case. I was going to be away from my trading desk for a few hours, so I entered the trade with this candlestick here, this one, which to me looked like a rejection, forming a smaller double top. It got to the third touch impassively, went down and then went back up. And this candle here on the 1 hour time frame to me looked like a rejection, and I entered from there. And after a few hours, the market impulsed up and it took me out with a 1% loss. So I'll go to the next trade which I took, which was on New Zealand dollar against the Japanese yen. Go up to the higher time frame, go to the daily time frame. You can see on the daily time frame, this was a structure which had been touched three times. First time, second time, and the third time it approached the trend line correctively with a structure within a structure, and then it impulsed down, and down here this to me looked like a bigger correction. If we go to down to the 1 hour time frame, this trend line had been touched two times, and I had planned to enter on the third touch. As you can see, it had touched it first time, second time, and this was the third touch. If we go down to the 15 minutes time frame, we can see that the market approached that third touch correctively, and I drew this trend line. I plan to enter on the break of that trend line, and that is what exactly I did. After the break of the trend line, it broke the trend line impassively, and I entered with this candlestick right here with a 50 pip stop loss. My stop loss was just above the structure. The market corrected for like 1.5 day, and then it impulsed down. After this impulse right here, I moved my stop loss from here to break even, and then the market just trickled up and it stopped me out at break even. With this I made nothing. The next trade is on gold against the US dollar. If you go up to the daily time frame, this line which you see here, I marked a double top area. If we go to the 1 hour time frame, you can see that when the market got there, it started forming a reversal structure which had been touched like three times. One, two, this didn't touch exactly the trend line, but I counted it like a touch. Second, third, and on the third touch, this is where I entered. I had planned to enter. The market got here impulsively, so I had planned to enter on after the first impulse. Impulse after the first impulse, I had planned to enter after the first correction, the break of the first correction. If you go down to the 15 minutes time frame, the market did exactly that. This was a correction right here, and I entered on the break of that correction. My stop loss was a little bit bigger with a 100 pip stop loss. The market after that it corrected since New York opened Thursday up to Friday when it closed, and that's when I decided to move my stop loss from up here to break even. For that trade is still running on Monday. If the market open and the market goes up and stop me out, it will stop me out on break even. I wouldn't have lost anything there. And on the fourth trade which I took it on our dollar against the Canadian dollar. It's almost looking like the gold trade which I took. You can see it was a double top area, and the market got there impulsively, and this it's a small rejection on the daily time frame. So I was waiting for the market to impulse down and give me a correction. I had planned to enter on the break of the first correction. As you can see, we go down to the 15-minute time frame. The market impulsed down and it started forming some sort of a correction, and I entered with this candlestick here. Once the market broke this trend line, it went down. That's when I entered. I'm still in this trade. If the market opens on Monday and the market impulse up or trickles up, it will stop me at 1%. If the market decide to go down, it impulse down, I'll move my stop loss to break even. If the market reaches to this outer trend line here, I'll watch it. If it gets there correctively, I'll take some partials. If it breaks the trend line impulsively, I'll hold the trade with my profit target being this area down here. This is why I took this trade. The risk reward to this first trend line is very small. If it were on another structure, I wouldn't take it, but I'm hoping for the market to move down and to reach to this area down here. That's why I took it. So guys, that has been our video for today. Those were the trades that I took last week. I didn't close the week with a lot of profits, but if you combine the profit that I've made this the previous weeks, it's a good profit for this month. The month has been good to me. So guys, that has been my video for this week. Thank you. Please subscribe, like, and refer others to these videos. And if you have any questions, ask them down on the comment sections. Thank you. Have a nice weekend.